Hey, what's up, Dividend Nomads? Welcome back to the channel. Today, we're going to be looking at some Nasdaq covered call ETFs. In my last video, I compared the S&P 500 covered call ETFs, and now I do own XDTE, but right now, I'm looking for a place to put some more money to, spread my portfolio out a little bit, and I'm considering investing in some Nasdaq covered call ETFs. I used to own QDTE. I don't anymore. I sold it before the tech sell-off, but I don't know. I think we might be coming to an end of this road here, and I might be wrong, but I'm looking for a place to put some money, and the Nasdaq is a pretty good place because I like diversified index-based ETFs as opposed to single stock ETFs. So that's why I'm looking at these today. So I'm going to record the screen on a computer. We're going to compare some of them and see what they look like and see how they stack up. So let's do that. 3, 2, 1, bam. All right, so here we are. We're going to use this tool right here. I'm going to put the symbols in. It's going to automatically adjust where they're both on the exact same time frame. So we're comparing, apples to apples here. That we're doing the same time frames. We'll look, for me personally, like I live out of my portfolio. So I want to choose something that I can actually take the dividends out. So we're going to be basing the winners on that. If you can take the dividends out and who is the winner there, and the winner stays up. So pretty simple, pretty straightforward. I've got a list here on my phone, a watch list of Nasdaq covered call ETFs. So let's get started. And first off, just no particular order. We're starting with Defiance, QQQT. And we're going to start with Defiance, QQQY. QQQY. Hey, what's wrong with my computer here, man? Or what's wrong with me? All right, so here we go with the first two, QQQT, QQQY. This is going to put the time frame on since 6/21/2024. We have QQQT in the black and QQQY in the blue. This is with dividends reinvested, which honestly I don't care so much about. But we can see QQQT is the clear winner. Now, if you pull the dividends out to live off of, again, QQQT is the clear winner by quite a large margin. So QQQT will stay here, and QQQY, goodbye. All right, so next up on the list, we have a long time classic here. We have QYLD from Global X. QYLD. This thing here has been around for a long time. Let's check them out. Okay, so again, we're looking from 6/21/2024. QQT is black, QYLD is blue. You can see QYLD has a slight advantage here at the end. So QYLD is the winner there. If we pull the dividends out to live off of, again, similar situation here. We have the blue one here, which is QYLD. So QYLD is the clear winner by a couple of percent. So that didn't last very long. Okay, out of here. So the next one on the list is kind of new. It's been around for about a year, I think. It's Goldman Sachs JEPQ. A lot of people say a lot of good things about this ETF. Let's see if it's true. Okay, JEPQ is in the black here. QYLD, again, in the blue. So JEPQ is the winner by a large margin when you reinvest. Let's check it out. When you pull the dividends, same thing, a very large margin of difference here, more than $2,000 difference. Now, that makes a big difference when you're dealing with a lot of money, when you have a large portfolio. And this is based on $10,000 invested, and over $2,000 difference is pretty big deal. So yeah, JEPQ is the clear winner there. All right, let's move on. The next one I have on the list is Granite Shares, TQQY. And I have to be honest with you guys, I do not really like this company. I don't care for Granite Shares, but I'm unbiased here when it comes to these charts and decisions. I try not to be biased on these things. JEPQ in black, TQQY in blue. JEPQ is the clear winner, again, by about $2,000. If you take the dividends out, again, about a $2,000 difference. So GPIQ is definitely the clear winner there. So goodbye. All right, what else we have here on the list? Oh, the next one is also a long time classic, JP Morgan's JEPQ. Let's see how JEPQ stands up to this one. All right, so JEPQ is in the blue. We look at the time frame here, we're from 2023. GPIQ is beating JEPQ, almost $1,000 difference. Down here, if you pull the dividends out, GPIQ is still beating JEPQ by almost $1,000 difference. So GPIQ, again, is the clear winner. Okay, what else do we have on the list here? We've got JEPQ, we did that one. Oh, we have the NEOS QQQI. Everybody loves this one too. So these two are kind of two fan favorites. A lot of people say a lot of good things about both of these. Let's see how they stack up. Okay, so here we go. JEPQ is the black, and this is since January 2024. So almost 2 years worth of data, or yeah, because January 2026 is right around the corner. So almost 2 years worth of data here. And then these things are almost neck and neck. Look at that. But you can see the black one there has a slight advantage. This is with reinvesting. If we go down here to the bottom, GPIQ again has a slight advantage by almost $200. So not a big difference, but it is a slight difference with GPIQ slightly winning. Look at this, a 17% return versus a 16.25%. So yeah, total return 33% versus 31. So yeah, slightly different, but not a huge difference. But GPIQ, again, the clear winner. Okay, so we'll get rid of that one. Do I have any more here? I've got QDTE on the list here. Let's check out QDTE. All right, so QDTE, we're again looking at a long time frame. This is March 2024, so not quite 2 years, but almost. We have the black one has a slight advantage. What's the black one? The black one is GPIQ. So GPIQ is outperforming with reinvested slightly more. Now, if we take the dividends out, you have a big difference here. If you're not reinvesting the dividends, GPIQ is the clear winner by about $600. But not too bad. GPIQ is and QDTE are hanging in there pretty close. Like $600 isn't a big deal if you're dealing with a small, like $10,000 portfolio, I guess. But when you have a large amount of money, this, is going to be a bigger difference of income. But yeah, not bad. I'm quite impressed with both of these. Let's throw in a couple of bonuses here. I guess you wouldn't call it a bonus because, JEPQ isn't really the Nasdaq. It's like hand-picked funds from the Nasdaq, but not the entire Nasdaq. And so the next one I'm going to show you is the same thing. It's FEPI, which is basically stocks that are in the Nasdaq, but it's not the entire Nasdaq. It's basically like, I think 20 or 30 stocks that are handpicked from the Nasdaq. So let's have a look at FEPI. FEPI's in the blue. GPIQ, clear winner by a large margin. And when you pull the dividends out, again, almost a $2,000 difference. GPIQ is the clear winner. So nothing seems to be better than GPIQ. I have two more on the list that I want to show you. This next one, though, is a new one, so the time frame isn't really that good for telling a story, but TDAQ, TDAQ, this has been around for a very, very short time, and I don't really recommend people investing in something that doesn't have much data behind it, but we'll look at it anyway. So TDAQ is blue, GPIQ is black, and these two, TDAQ is, well, what happened to my screen here? TDAQ is winning, it's outperforming by a very small amount. If you take the dividends out, again, TDAQ is still outperforming by about $100. But this is, look at the time frame here. This is just since August of this year, and we're in November of this year right now. So it's not been very long time frame here that we have to work with. So such a short time frame, it's hard to tell what this is going to be like over the long term. But so far, it looks pretty good. And if it's performing similar to GPIQ, which we've seen GPIQ was the clear winner of all the other ones, this one should be pretty good too. Now, the last one I'm going to share with you guys, this one I don't hear a lot of people talk about, but this one is QQQH. So this is from NEOS also, but this is a hedged version. So this is like basically the same thing as QQQI, but with the hedge. So it protects you a little bit more during the downside like we're having now. And let's see the performance of this one. GPIQ is black, QQQH is blue, and look at the difference here. A massive difference. Look at that. Double. That's crazy. This is since 2023. So if you put $10,000 in here on 2023, you would have double the money if you invested in QQQH. If we go down here to the without reinvesting, if you pulled the dividends out, again, you would have double the money. That's pretty crazy. Wow. I did not expect that. So, yeah, this is pretty massive. I don't understand how it can be so crazy. But QQH, clearly, it looks like a very, very good investment, according to this. And it's hedged to the downside, so you get some downside protection when you're going through times like we just went through. So that's something to consider. Me personally, I really liked QDTE when I had it. It performed quite well for me, and it pays every single week, which is what I really like. But if I was looking for a monthly payer to pay me for over a long period of time, like say if I had a long time horizon, I think I would probably be looking at GPIQ, GPIQ, or possibly QQQH. I don't know, that looked really good on the charts. As a matter of fact, let's just go look at it really quick on the website just for fun, because I'm kind of curious here. NEOS. Okay, what's all this crap? Let's check out QQQH. Here it is, QQH Nasdaq 100 Hedged Equity Income ETF. Let's check this out. So again, you can see here, got a monthly distribution, 0.68 expense ratio, distribution rate 9.12%. Okay. Let's see the target benefits. Let's see what this is. Let's see, tax efficient monthly income. May offer downside protection via a constant, fully financed market hedge. So when the market's good, they still hedge. It doesn't matter. It's a constant hedge. Fund may offer flexibility across the markets, a systematic approach to capturing gains and minimizing losses. So they're basically just trying to minimize losses through the hedge and provide income. So you can see here the objective of the fund. High monthly income in a tax efficient manner with downside protection. So it's pretty simple, right? Monthly income, downside protection, tax efficient. That's what we're looking for. So this is pretty good to have in a taxable account because it's tax efficient, right? Like in a Roth IRA, it doesn't matter. You don't pay tax in a Roth IRA anyway, but for a regular taxable brokerage, this might be pretty beneficial for taxes, and you have the downside protection of the hedge. Not bad. Let's go check out, let's look down here at the performance, just out of curiosity. So this is it was updated on 10/31. So this is 10/31 or prior to that, nothing after 10/31. Okay, so the NAV performance for 1 month, okay, year to date, 14.71, not bad. Cumulative 78. 1 year, 20%, 22, 5 years, 9.68. So not too bad. You're getting a pretty decent return there. about 10% annual return. That's on the NAV. That's not the dividends. So growth at $10,000 at NAV. So this is just the NAV growth. We're not including the dividends. So you can see here it's slightly trailing the S&P. The S&P is the dark blue. This is the light blue. So you can see it's doing exactly the same thing, or the S&P is doing exactly the same thing. Oh, it is the S&P, but this is QQH. But anyway, it's doing exactly the same thing. It's just slightly underperforming, which what you expect from a cover call ETF. They're going to underperform because they got to pay money out. Distributions every month. What's that? No, it's a low one, 19 cents, 39, 37, 34, 41, a bunch of 40s. So on average around 40 cents every month. And here's what they have. What are they holding here? NVIDIA, Apple, Microsoft, Broadcom. This is just the top 10 holdings. So basically the same stuff that's in the S&P pretty much. So yeah, overall, this fund looks pretty good. I wouldn't mind holding this myself in a long-term taxable brokerage account. Around 40 cents a month, downside protection, tax efficient, looks pretty good. Anyway, let me know your thoughts below. I'd love to hear what you think about QQQH and which Nasdaq cover call ETF do you own, if you own any, and if not, which one in this video piqued your interest. I'd love to hear your thoughts. For me, monthly pair, JEPQ, and QQQH definitely got my attention. And for a weekly pair, I'm not going to go with anything other than QDTE probably when it comes to the Nasdaq. That's my thoughts. Love to hear yours down below. See you on the next video.